Hi, it's Steve and Joe from Freshagenda. And Steve.
Back with an exciting instalment of our usual not so weekly take this week.
This week with added outlook.
Yeah, that's right.
So this week we've had the Global Dairy Directions quarterly update go out to subscribers.
About 10 minutes ago.
Yes, hot off the press.
Yeah.
Another positive GDT. And of course Charter Week.
In the meantime, we've been to the US and back, and we've been part of an event in California, and interesting discussions, positive discussions. I would think the mood was certainly upbeat at that event, and talk about a couple of things in that.
Yeah, I think the thing out of the outlook was the bottom is behind us.
Yeah, the rearview mirror.
In the rearview mirror. So let's go on to what's in the outlook then, Steve.
So wrapping up at a commodity view, and the colour coding on the left-hand side, we debated this quite a bit about how to show this on a table like this, but Joe won. And so what we've got are the colours on the left-hand side, the greens, the oranges like a neutral. So we're more bullish than not in this case as we see things.
Which is quite a shift, Steve.
Yeah, I think yeah, it is. So skim milk powder, I think we're seeing more. The positive view is more on supply side limits.
Yes,
tightening, particularly in Europe, but also the US, reducing skim milk powder output. We still have some issues on the right hand side, obviously with delayed recovery in Southeast Asia and a well-stocked Chinese industry, we believe. So that's weighing on that, and we've certainly seen an uplift in values in skim milk powder markets. Come on to that. In terms of fats, it's a mixed scenario. We've got really strong prices in the US, which doesn't have much implication on the world market.
That's right.
Europe is firming cautiously as well, with a bit better demand. However, on the other side, we see some caution on the world market and weak recovery in trade. The developing regions have quite weak demand occurring. Demand is not growing at all, and we've probably got a higher availability out of New Zealand, so that's keeping it
a lid on it a little
subdued. Yeah, we think mostly sideways, maybe a slight uplift. Cheese got a really mixed scenario as well, and in terms of this is about the world market, and we think the US situation is weighing on that. Again, a GDT result will show us that. So there's that price competition in trade, and an overweight US market is the issue. The European demand is steady. That seems well balanced. It's gone sideways for months. So it's also cautious. So that's a neutral position. We think the net effect of well-managed supply onto the market has given the support to values, and in our analysis that continues. There is obviously a weakened Chinese requirement, which is taken into account.
This is for whole milk powder.
Whole milk powder, yes. Yeah. And in the whey complex, that is very weak but improving steadily. Well, we're seeing spectacular recovery in demand for both WPC80 and dry whey in the US. That's off a really low base.
Yes.
And so quite a while before that, those balance sheets come back into some sort of even kilter. So the demand improvement on the left-hand side there, and an advantage for dry whey in terms of protein costs. But we still got some heavy factors on the right. Cheese output's growing. The Asian market's still quite weak.
Yeah.
So that's points into that. Got some watch outs which are interesting.
Yeah, some big things here.
If you didn't notice, that was a hurry up. So it's what really could be really big things. Ireland is said to have a need to cull 200,000 cows in the next 3 years. The government wants to bring forward 50,000 of those in the next few months.
Yes.
So there's all sorts of complaint, as you'd imagine, in that industry, that they've grown too much and therefore need to come back. This is all about emissions and a bit about the runoff issues. Joe, I think there's something about buying olive oil, I hope, tonight.
Yeah, a massive impact on the olive oil crop in Europe. Some estimates of a 50% reduction. And obviously that's going to have implications for fat availability. And we're also seeing some movement in palm oil prices as well that's being talked about. So some of those alternatives are starting to get more expensive. El Nino and the US dollar threat to Southeast Asian inflation, Steve. So this is around the implications of El Nino for rice production.
It is, yeah.
And also the US dollar implications for pushing up prices in Southeast Asian markets. Just
the general, because they're import dependent, the impact of the dollar generally on their inflation.
So that's likely to have a bit of an impact on their disposable incomes and their ability to buy dairy.
Hence it's in the red zone. Yeah.
Yeah. And on the supply side in the red zone.
Yeah. So the very wet weather in Europe during summer, it's now drying out and they're having warmer than normal conditions from, the next couple of months. So ideally set for better feed production.
That's on the continent. We'll see a different story for the UK, won't we, in a little bit?
A little bit. And just to round up, we didn't talk about that Brazilian issue.
That's right.
Brazilian issue. So I think it's something we've mentioned before, how the demand from Brazil probably saved a greater calamity in New Zealand regarding product mix. So the Brazilians, the industry and the government are fed up with the volume of imports coming in from their neighbouring countries and they want to slow that down or stop it. So there's some curbs through using tax incentives, which could push that whole milk powder back onto the world market. Certainly one to watch whether that works or not. So it's a good wrap on the issues to have a look at. So we're running up to event 341. This is remarkably boring how these charts all look really similar. Over the last 2 weeks, we've seen obviously an uplift in protein markets. Whole milk powder, you could almost swap that and not spot it. It looks very similar, supported by a pulse result in between the two GDTs, and cheese different.
Very different. So this is an interesting phenomenon that our colleague Phil Plord from Everegg has been talking about of late.
Talked about this last week at the conference that again, we've seen that really weird chart on right there. This is spot prices on the CME, but it rose and then it fell.
A lot of volatility.
And so the issue that our colleagues in the US are talking about is the opening and closing of the export window. And you can see it graphically here. Here we're showing the red line is the difference, the barrels price over the mozzarella, the European mozzarella price in US dollars. So below the black line, the US has a price advantage. Above, it swings to Europe, and you can see the lag. So after the US has the advantage. You see the bars of exports into those contestable markets increase, and then swing back the other way when the US is more expensive. So, and when that product doesn't go to the export market, it comes back to CME.
Yes.
And if you line up the timings, you'll see that's what's driven the volatility in the US market, which is pretty interesting. And so it's just that fragile balance in that market and the importance of exports being a vent for what is heavy production growth. So that's, that's weighing. I think, we go to the GDT results from last night and you see that cheddar result there.
It's the outlier, isn't it?
Ironically brings the average back to the US block cheese price, spot level. So look, a really positive result.
4.4% increase overall.
Whole milk powder up nearly 5, skim up over 6.5. Fats are a bit mixed. AMF stronger and butter just peaked above the line for a 1% gain. I thought the interesting thing in skim milk powder, which I'll always go to, which is the most important, I think, out of GDT, this is the most important thing with world consequences, how Fonterra achieved the smallest lift. We saw a strong return by US product, which had a solid gain, but the discount for New Zealand product against European skim milk powder increased.
So is that the market's feeling there'll be a bit more available out of
Sounds like it to me, yeah, that's right. The demand supply stuff, Joanne loves these charts, so I'm going to be really quick. That we saw strong powder demand. So interestingly, how whole milk still went up. Now look at these week, event to event. You wonder, are they consistent?
Yeah.
But whole milk powder started below average and went for a long time, and that kept the result firmer. Well, skim milk powder opened strongly and continued strong. So pretty solid result there. And where did it come from? So China backed off in both from the previous event, which was a strong one. So this has China come to save us question? No, not yet. So they backed off in both. And when we look at the Southeast Asian involvement, they stepped up in both. Kind of didn't almost countered it. There are other players in this, but that's probably the most encouraging news from the event is how Southeast Asia stepped up.
Although still well short of where they were this time last year.
Definitely. In skim milk powder, they're way behind. The Middle East came back again buying whole milk powder because they just can't resist a bargain. Getting it out of reach to some extent. And then on the right, European buying, lifting, because that's where the new frontier is for GDT.
Yes.
They're increasing their efforts to get more buyers, more sellers in that region. And this is where I guess we're seeing some evidence of that.
And the other part of that, lifting European product of New Zealand, a few more European buyers looking to source from there.
Yeah.
Interesting.
A couple of other interesting things we always look at, just this difference in whole milk powder and its recombined value. That's still a narrow discount from whole milk. Discount. Whole milk is at a discount. And AMF is coming back. Sliced $250 off the discount, so it's moving back up towards butter, but still a long way to go out of that deep hole. And the milk value in New Zealand has clambered back well above the current mid-range of the Fonterra estimate, but in line with what a chorus of others are saying now, including ours. I mean, our full year estimate at the moment is around about $7.40, $7.50 in that range. So we're back around that at a spot level.
And it's a good thing because we just had in this week's newsletter, Dairy New Zealand revising the break-even price upwards. So Kiwi farmers will need every bit of that, if that's accurate.
Yeah.
Now, chart of the week.
What have you got?
Well, let's head across to the UK. And as we were talking about European conditions being pretty positive for milk production, but what's going on here, Steve? It's a little bit of price pressure. High input costs are really weighing on UK farmers right now.
Yeah, milk prices have plummeted from not very many months ago in the high 40s pence per litre now to the mid 30s. With we understand some more price reductions to come, so that's put them into a deep cash flow pressure. The sentiment's been pretty bad for a while about this factor that's now showing up quickly in the milk production numbers. And more pain probably to come because it'll be a little while before we see that pressure alleviated in terms of the milk price value. The European market is improving, but it takes a while before that hits the UK. So the milk will dry up a bit, and we'll see that black line. It'll go sideways for a little bit.
Yeah,
and
probably a bigger gap in weeks to come.
Yeah, they're down 2% year on year at the moment, so that's going to widen. So implications for Europe, maybe a bit more local cheese requirements, so they may improve their imports. So that's a positive, I guess. Right, that's it from us. It's been a long one this time. We'll be back in a couple of weeks, and thanks for watching.